AI is about to do to money what the internet did to newspapers. Except this time, you only get one real shot to be early instead of roadkill. I'm Thomas Paul, this is the comment section, and today we're talking about why the next 5 years might be your last realistic window to move from getting by to actually wealthy in an AI-driven economy. Here's where things get interesting. Everyone feels broke, but that's not the real problem. The real problem is that the ladder is getting pulled up faster than you can climb. AI is not just some cute chatbot. For the first time ever, one person with a laptop can do the work of an entire team. Writing, coding, editing, research, customer support. That means companies need fewer people. But the people who own the tools and the assets get richer, faster. So the game is quietly changing from work harder to own more. If you only sell your time, you're playing a game that AI is actively devaluing every year. But it's even getting worse. Let's break down the key ideas behind this 5-year window everyone's freaking out about. First, AI is accelerating faster than any prior tech shift. We saw this with the internet and smartphones, but AI is compressing decades of change into a few years. Entry-level white-collar work is getting automated, or at least sliced into tiny, low-paid chunks. Second, we're moving into winner-takes-more economics. If one lawyer with AI can do the work of 5, guess who keeps the extra 4 salaries worth of value? Not the junior staff. It flows to the partner, the firm, the shareholders. And here's where things take a step further. Wealth is going private before you ever see it. The big upside in AI, crypto infrastructure, and even boring cash flow businesses increasingly happens in private markets. VC deals, private equity, insider rounds. By the time stuff hits a stock exchange app on your phone, a huge chunk of the vertical move is already over. Same story with housing. Used to be, buy a starter home, ride the appreciation, level up. Now, prices are insane, rates got jacked, and supply is a joke. Housing went from wealth ladder to paywall. Here's where things get interesting. So, what does that mean for you, as a retail investor who actually cares about tech, crypto, and politics? First, there's something like an AI expansion gap. People who learn to use AI as a daily tool are quietly pulling ahead. Even a 20-30% productivity boost at work compounds into better reviews, faster promotions, higher income, and more money to invest. Meanwhile, people who refuse to touch this stuff, they're not just standing still, they're moving backwards relative to the people who are using it. That leads to what I'd call the great decoupling. Companies don't need as many humans to get the same output. Labor's bargaining power weakens, while the upside goes to whoever owns the capital and the IP. But then the unbelievable thing happened. Instead of this being pure doom, AI also opens a weird, temporary opportunity zone. Because AI makes it cheaper than ever to build something on the side. A content channel, a software tool, a niche product, a course, a newsletter. Stuff that used to need a team, you can now prototype solo at home. If you're willing to be early and a little uncomfortable. That's the paradox. AI is killing some paths while massively boosting others, but only for people who adapt before it becomes standard and boring. In terms of how I plan to invest, I'll get to my own game plan in a second, but first you need a simple checklist. Step 1. Skills. You need at least one thing that AI can't fully replace yet. That can be sales, management, storytelling, deep domain knowledge, or anything that involves trust, taste, or real-world judgment. Step 2. Use AI as leverage, not as a toy. Use it to write drafts, analyze data, summarize research, generate ideas, build prototypes. You should be treating AI like an unpaid analyst who works 24/7, but it's even getting worse. Step 3. Diversify your income streams. In an AI world, one job is one point of failure. That might mean a side business, contract work, digital products, or content that can be monetized later. Step 4. Turn income into ownership systematically. That means owning productive assets, broad market index funds, selective tech and AI exposure. Crypto you actually understand, not random meme coins. Maybe rental real estate if you're not overpaying like it's 2021 again. And then there's the boring one, lower fixed expenses. I know, very unsexy. But keeping your lifestyle lean gives you the flexibility to invest more when everyone else is panicking on Twitter. And here's where things take a step further. If you're listening to all this and thinking, that sounds great, but I don't have time to research, script, and edit content or videos every week, this channel is literally built around solving that problem. This video was created with Fludge.io, the same system that powers this entire channel. If you're watching this and thinking, I'd love to run a YouTube channel like this, but I don't want to be on camera, this is exactly for you. Fludge researches, creates, and posts YouTube videos for you, fully automated, but you stay in control. It finds topics, writes scripts, builds thumbnails, uses an AI avatar, and uploads. Your job is to review and hit publish, or jump in at any step if you want more control. As you can see, this isn't low-effort AI spam. The research is solid, structured, and actually watchable. Otherwise, you wouldn't still be here. If you want to start a channel in finance, news, hobbies, whatever, without burning out or buying a camera, check out Fludge.io. Link is in the description. Here's where things get interesting. Let's zoom out to the 5-year question. Why now and not someday? Because these transitions always follow the same curve. Early on, the people who move first can get outsized gains just by showing up. Later, once AI is fully baked into every workflow and every job description, the edge disappears. It becomes just another requirement, like knowing how to use email. So over the next few years, you're going to see more AI in hiring and firing decisions, more regulation fights over data, models, and crypto, more pressure on wages at the bottom, more rewards for capital at the top. But then he said this unbelievable thing. Despite all of that, there's a real chance AI creates a kind of golden age for people who position correctly. Cheaper services, faster innovation, more ability for one person to spin up something real without begging a boss or an investor for permission. The catch? You have to decide whether you're going to be a user, an owner, or a spectator. In terms of how I plan to invest, here's my personal angle, not financial advice, just what fits my risk tolerance. Number 1, keep most of my net worth in boring things that actually survive cycles. Broad index funds, cash reserves, and real assets when they're not insanely priced. That's the don't blow up bucket. Number 2, a focused slice in AI and infrastructure. Companies building the picks and shovels, not just the hype names. If AI really is the new electricity, I want some exposure to the grid, not just the TikTok famous startups. Number 3, a capped small allocation to Bitcoin and higher conviction crypto I actually understand. Crypto is still tied heavily to liquidity, regulation, and political drama, so I treat it as asymmetric upside, not my retirement plan. And number 4, keep building my own assets. This channel, my audience, systems that can survive even if one platform nukes the algorithm tomorrow. But it's even getting worse. When I was in my early 30s, I put money into something boring and unfashionable while everyone else chased the hot thing. It didn't 10x in a month. It just quietly worked, year after year. That experience is why I'm allergic to get rich in 90 days from AI promises. So if you take anything from this, the AI money shift is real. You probably do have a 5-year window where being early actually matters, but the way through it is not leverage, lottery tickets, and hype. It's skills, tools, ownership, and boring consistency. This is not financial advice, it's education and entertainment, so you can make your own decisions. If you're still here, you're my kind of nerd. Drop a comment. What's your AI money plan for the next 5 years? Stack BTC, buy AI stocks, build a business, or all of the above? Hit subscribe if you want more no BS breakdowns at the intersection of AI, money, and politics. I'm Thomas Paul. This is the comment section, and I'll see you in the next one.